Now we are going to discuss the introduction of Islamic finance. This is the first discussion in terms of Islamic commercial law. First, we will try to understand that what is the basis of Islamic finance, how it originates, what are the important concepts to understand before we move to the commercial side of our discussion. First of all, Islamic finance is derived from the principles of Islam, which is demonstrated by Holy Prophet Muhammad, peace be upon him. In terms of essence of Islam, it is derived from the Holy Quran and the ways of Holy Prophet actual conduct observed by his companions. Muslims believe that Sharia refers to commands, prohibitions, guidance and principle under Islam, and it is clear path for the believers to follow in order to obtain guidance in this world and deliverance in the next world. In terms of principle, we will keep discussing the sources of Islam, which will include the Quran, Sunnah, it will be Ijtima and Qiyas. This is our discussion we will do in this particular course. Today is more about Islamic finance introductions, and when it comes to Islamic finance, of course, we should know the sources of Islamic finance. When it comes to the principles of moral values related to the commercial transactions, of course, timeliness in terms of payments of debts or delivery of an asset, and failure to observe this aspect might involve legal consequences. Tolerance in terms of bargaining, where parties are engaged into transaction in the process of buying and selling. In terms of mutual revocation of a contract on request by one party, he finds himself uncomfortable with the outcome of the transaction. Honesty or amana, that is in all states, statements, presentations and warranties. These basic things we should keep in mind when we are going to follow the Islamic finance. Ideally, when we talk about Islamic finance, Islam is a religion of peace and harmony, and it gives respect to all the religions and accept the rights of human beings. Therefore, it does not apply only to Muslims. Islamic finance is a choice of financing, and it has several options, which is quite comfortable for the human beings. Therefore, it is applied to all. In terms of understanding Islamic finance, we can see that anything that is according to the Sharia guidelines, rules and regulations, this is into Islamic finance. We'll see about Islamic standard, we'll see about accounting standards, and a lot of time we will keep discussing the conventional finance with the other finance. We will be discussing about comparative financing option in terms of conventional finance, which is based on interest mechanism, and simultaneously we will be discussing the differences and I will be explaining you the mechanism of Islamic finance in particular. Islamic finance is a term that reflects all aspects of financial business that are not contradictory to the principle of Sharia. What is Sharia, how it operates, this is what we will discuss in the next few discussions. Let's talk about the banking in terms of interest, which is in Arabic we call as riba. Anything which is Islam, of course, based on interest is prohibited by our Holy Prophet and by the commandments of Allah. Anything which has an element of interest is prohibited, and we cannot take ourselves, we cannot involve ourselves into interest-based transactions. Therefore, Islamic finance is a solution in terms of providing financial products and services based on non-interest mechanisms basing in terms of trade, buying and selling, which is we have different types in Mudaraba, Musharaka, Ijari and Istisniya, Salam. This is one by one. I will keep explaining you all. In terms of interest, what is an interest? This is in general we know that if you give a bank $100,000 and they agree with you that after a certain period of time they will give you a certain percentage, for example 10%, and after 1 year, for example, you will get 110,000. This 10,000 is your interest, which is in Islam is prohibited because it's a pure form of a guaranteed placement in terms of non-effort work. So how we see Islam is the Islamic finance is from the beginning is in the denial of this kind of interest-based mechanism. Part of this is in modern economy we have money. Money is in terms of note, coins and plastic money. So money, a subjective discussion always between the Islamic scholars. But as a student of Islamic finance, we should know that riba is defined as usury or interest. In an interest-based system, money earns money, and through lending and in terms of application of financial interest on riba, it is purely prohibited in Islam. Money in Islam is a medium of exchange only. It has a storage value. It has a unit of measurement. This is the same in terms of money characteristics. It is the same in terms of Islamic money has a characteristics. Let's talk about the Islamic relation between the users and the supplier of funds. Of course, when it comes to IFIs like Islamic financial institution, they are made for providing a platform in terms of Islamic finance, and all the customers who believe that their money should be free from interest, they want to approach and create a relation between them and IFIs. Same way there are people who are connected with IFIs who are looking for some kind of fundings. So through the mechanism of Islamic institutions, they create a relation between the customer and the institution. If you compare yourself like in terms of conventional banking, a customer is having a lender or borrower little relationship that you lend, you borrow, and you get interest out of your exercise. In terms of Islamic finance, depositor or a custodian relationship, because you give deposit and the institutions keep it as in custody. We have lender-borrower relationship, which is free from interest, and we have investor-entrepreneur relationships, which is in terms of a customer become investor, and through different kind of Islamic option like Mudaraba, Musharaka, they work with in a joint venture for generating a trading activity and get the mutual gain or losses. In terms of financing or assets as a contractual relationship in conventional banking, this is always between a borrower and lenders. In terms of Islamic banking, you can have a relation of purchase and seller. IFI can appoint you as a representative. You have lesser relation in terms of ijara financing. You have principal agent relationship, and you have entrepreneur and the investor relationship. This is how it goes. In terms of Islamic finance, of course, insurance is one of the main component of the economy. And in terms of insurance, everything need to be insured as in traditional conventional finance. When you buy a home, you have to get a home insurance. When it comes to personal loans, you have personal loan insurances in case of default. It will serve as an indemnity to the lenders. Then we have other type of insurances in terms of logistics, shipments and couriers. So What solution Islamic finance, Islamic financial systems gives to those investors who are really interested in terms of Islamic products of insurance. There is a deep discussion about the takaful as Islamic insurance. Here it's just like a general introduction that we have Islamic insurance called takaful, and this is an insurer that is an insurance company which is prohibited from providing any type of indemnity to be insured to the policyholder, that it is because it is not acceptable as per the Sharia principles. So how it goes is, of course, takaful is a scheme that provides mutual contribution and mutual assistance to cover both life and general policies. Takaful is based on donations contract, and conventional insurance is based on sale contract. But in terms of Islamic insurance, or this which we call as takaful, it is based on the concept that any gain will be considered as a donation. And we always avoid uncertainties because uncertainty is prohibited in Islam. Uncertainty in takaful is acceptable because ultimate aim is merely to help another and not to achieve any commercial gains. We'll discuss about uncertainty. This is one of the most important concepts of Islamic finance. Islamic capital markets, we have another discussion for this. In terms of introduction only, we have equity investments and we have fixed income instruments. In terms of Islamic financing, how it works, how it operates, this is I will discuss in details in the respective portions. Now, if we discuss the salient features of Islamic finance is a beautiful system which does not give burdens on the borrowers. It involves people into ideas, it is more creative, you create joint ventures through Islamic options of mudaraba, musharika, and you try to facilitate and give the ultimate benefit to the borrowers. Unlike in conventional, you put fine penalties and other things. In Islamic finance, any such thing does not exist in terms of pure concept of Islamic finance. First of all, Islamic finance must be free of interest.